Hello everybody, welcome back to a new decade of trading. 2020 is upon us and the markets are setting up very nicely so far for the year. So I believe it's going to be a great year. I'm glad you're joining us again. This is the first broadcast for 2020 after the long holiday break. If you guys remember back in, I believe it was the last live event, the last market review that I had done would have been, I believe, the first week of December, and I take usually most of December off from the markets, and a little bit of January as well too, until we wait to see how things shape up. So this review video, I'm just basically going to give you some ideas to where I think the markets are going to be heading for the year, and some of the directional bias. Just a couple of updates on the geopolitical front that I think we should all be very aware of if you're not already, and a few other news categories and things like that. So I'll get into this here in a second, but just a quick little disclaimer. I am, at the time of this recording, it is Sunday sort of early evening. The markets have opened up, which is typically when I like to do my commentary and do my weekly review commentary for everybody, and I do it from my home office, of course, not in my office away from home. And so today my wife, unbeknownst to me, had invited some family over for dinner. So if you hear the odd loud bang or shouting or kids crying, that's why. It's because I'm at my home office. So I apologize for that ahead of time if it does happen, but just to let you know, that's what's going on. So it's real life, folks. It is what it is. So okay, let's fire into this here real quick. Just do some quick news updates so we can get back into us. Keep it easy, keep it light for the first couple of weeks of January. Do not jump into the markets guns a-blazing and ready to make $1 billion in a day. Okay, ease into it. All the big money's starting to come back online. Things are just getting into it. The markets are starting to create their quote-unquote either highs or lows of the year. And they're just getting started out. So give the market some time to develop, and we can easily sink our teeth into the meat and potatoes of the moves that are coming down the road. We've got lots of time. 2020 is just getting started. So like I say, let's not get too excited right out of the gate here. So, and what I mean by that as well too is if you'll look at this week's economic calendar that I have in front of you here, it's a pretty light week. We've got Monday, we have an Italian bank holiday, and really no other impactful news right now for Monday. And I've got this guy set up to all the major Forex currencies. So I've got Canadian dollar, the pound sterling, the euro, the US dollar, Aussie dollar, things like that. So all the majors. I don't have any yen pairs or anything in here because I don't do a lot of yen trading, but I will, however, talk about the yen briefly today. For all you yen traders out there. And then going into Tuesday, it starts to heat up a little bit. We have ISM non-manufacturing PMI on Tuesday, and then we have Australian dollar building permits late in the day, New York time, 7:30 p.m. on Tuesday. So we've got a couple high-impact news events to keep an eye on there. Could be some setups for Aussie as well going to Tuesday. Wednesday, we've got non-farm employment, ADP non-farm employment change for the U.S. dollar. Crude oil inventories, which be careful on this one here. I'm going to talk about that here in a few minutes towards the end of the video here regarding crude oil numbers and what's to come. And then we do have the Australian dollar trade balance coming in again, same time, 7:30 p.m. New York time, Wednesday evening. Going into Thursday, this is typically where a lot of the major Forex currency pairs coupled with the US dollar start to kind of consolidate and stagnate right ahead of the non-farm numbers coming out on Friday. So just keep that in mind. If you are going to be looking for any trade setups, I would highly advise that you look for them Monday, Tuesday, Wednesday, and go flat for the remainder of the week, just because of all the excitement that could potentially happen around all the non-farm data coming in on Friday. And that obviously comes in right here at 8:30 a.m. New York time on Friday. So just be careful of that. There's also Governor Pulls is speaking for the Canadian dollar on Thursday, and then we have employment change and unemployment rate for the Canadian dollar on Friday. So Thursday, Friday, high impact news events. It's going to get a little bit crazy. And again, please guys, and I say this all the time, if you're just joining me, then this is going to be news to you. If you're not, then you already know. Don't trade non-farm payroll days. Don't trade FOMC release days. Don't trade big monetary policy announcement days for for other major pairs. We know this, guys. It's just a lot of volatility. A lot of amateurs will go out and they'll try to get in front of those trades, and they'll try to make, you know, $1,000 in a second, and most of the time they usually blow their account out on them because they over leverage and they don't know where the direction's going and they don't know what's going on. So for the love of God, please just save yourself the aggravation. And don't get me wrong, I've been there, I've done that. I am speaking directly from experience in my early years of trading. I have done that. So the best thing to do if you want to develop into a professional trader, into somebody who knows the markets, understands them, and is consistently profitable, because that's what the name of the game is consistently profitable. It is all about protecting your capital, protecting your account balance, and you're not doing that if you get in front of these big moving days like those. Okay, so if you're new, let that be an FYI. If you're old, if you've seen this before, then it's old news for you, and away we go. Okay, so that's the week coming up. Now, let's jump in the charts real quick. So I'm going to try to get through this as quick as I can. However, again, it is a new year, so I apologize if this does go a little bit long. My hopes are that I can clean this up for you in about 20 minutes. But I just want to talk about the US dollar a little bit. Obviously, unless you've been living under a rock, there's been lots of news out there with relating to the US and the US dollar. I mean, I don't even know where to start with these guys. I mean, I'll be honest with you. The Federal Reserve is pumping money into it. They're doing a new thing here that I'll talk about with my members, but they're basically going in and allowing a lot of credit institutions to essentially go in, a lot of big banks, investment institutions and things like that, allowing them to get more money and to put more money into the markets. And so I think what we're going to see as a result is we're going to see continuation to the upside in a lot of these stock markets, the S&P, the Dow, hitting record highs, and I think that's going to continue. I also believe they're just going to continue to push the ball down the road of the massive recession downturn that everybody's sort of anticipating and predicting and talking about. I don't believe we're going to see that anytime soon. Keep in mind, it is an election year as well, too, so it is in the current U.S. administration's best interest to make sure that the economy does not go into a recession, so they are going to do everything they possibly can to keep everything above board. We've got the U.S.-China trade wars that are starting to finally get a little bit of traction, and we have some deals and some negotiating going on, so I can talk about all of that. I mean, there's obviously all the U.S. attacks and everything going on in related to Iran, in Iraq, so that's going to kind of tie into a little bit about my discussion about crude oil here in a few minutes. So there's a lot going on. It was a very, very eventful December and very eventful early part of January, so hold on to your hats, guys, because I believe it's going to be a great year. Markets are going to move, and we got to make sure we're positioned correctly, obviously, with those moves to capitalize on them to the full extent. So that being said, where does that leave us with the U.S. dollar? Again, we do have non-farm payroll coming out on Friday. So we're at the start of the month, and as you can see, ever since the November, my apologies, I was going to say September, ever since November of 2019, you can obviously see here the market has been in a steady slide to the downward. We've taken out some major areas of liquidity below the market, taken out a lot of major sell stops for a lot of big institutions. So I believe we're going to probably going to see a continuation to the downside. That's my overall theory going into the bulk majority of the first quarter of this year. I think this is what we're going to see. Naturally, the U.S. dollar does reprice lower going into the first quarter seasonally. And what I'm going to do as well, just for you guys, I'm going to start a new thing this year where I'm going to give out a lot of free trading ideas, and sorry, not trading ideas, but advice essentially on different segments of trading and what you should be looking at and how you should be doing things, as opposed to just doing a straight analysis. So hopefully for some of the new traders, it'll kind of help you out and get a better understanding as to why I'm analyzing these markets this way, and hopefully you can kind of start to figure it out yourself a little bit. But one of the big things that you should be looking at is obviously seasonal trends and historically speaking, long-term trends. What does the U.S. dollar do? Well, in long-term, usually the first quarter you see a decline in the price of the U.S. dollar. So I fully expect to see that continue lower. Now, what I'm going to advise and just what we could see next week, and this is why I definitely don't, I'm not trading personally next week at all. I'm going to give it a few weeks to go into January, but I believe ISM numbers coming out on Wednesday, and then NFP which is non-farm payrolls, on Friday. I think what we could see is a bit of a retracement in the market, and we will probably see price run up to the 97.05 to 97.10, maybe even 97.20 level, which is up in this range here. Now, what I don't want to see is them go any higher than this guy right here. So this high comes in at 97, we'll call it 97.40, just for argument's sake. I don't want to see them come up and try to eclipse that high or anything. I like how they keep making lower lows and lower highs. That's that's your first indication of a downtrend. You've got a high, and then you've got a low, and then you've got a lower high and a lower low, a lower high, a lower low, a lower high, a lower low. So I want to see that trend continue, and I basically would like to see them come up this week and retag off of these levels in here, this tiny little consolidation area in here. I believe they're going to come back up, retest that area as resistance, and then fall over. Now, this candle here last Friday was very, very interesting. I was watching the markets. We had a nice, big, strong rip up. This could be the high, okay? So I kind of think they're going to keep pushing it a little bit higher. I could be wrong, but I definitely don't want to see them go above 97.40. That's my line in the sand. If we do go above 97.40, it's very easy. I believe the next target is going to be at about 98.15, somewhere up in that range, to 98 to 98.15, where I've got this shaded in here. So if we breach this high, we can target up here and get into a couple of short trades, no problem. But what I think we're going to see is price roll over in here. If price does come above this high here, I'm expecting it to roll over in here, and then we're going to see a continuation to the downside again. But so far, I like what I see. We had stops taken here. We had stops taken under here. Price rebalanced back in this range here. Nice little reaction off of it, and I'm expecting them to continue lower. Now, I'd normally have this low here marked out as well too, but I believe this low and this low are very, very close to each other. So I'll be honest with you, I'm just going to sort of lump that all into one. My downside target is going to be this low down here at 95.15. And then ultimately, we have a series of consecutive lows here, 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 and here that we can target from there. So I don't want to get too far ahead of the game. We're going to be looking for price to continue to run down to here, going into the end of the month and into here, and then we'll worry about price when that time comes. So that's what my overall forecast on the U.S. dollar is looking at right now. As long as we stay below this 97.40, we're going to be bearish, and we're going to be bearish down to 95.15. If price goes above 97.40, then short-term bullish up to at least 98.15. Okay, so try to keep it as simple as possible. That's what we're looking at there. Now, Euro USD, interesting, and actually I got to thank one of our members for pointing this out on the weekly. I usually don't do weekly, well, I haven't looked at the weekly for Euro for a little while, so I'm glad he pointed it out. But basically what we had happen last week with the Euro, we had price come slamming back down. See this candle right here? This was the last week's candle. I'll zoom in a bit here for you guys. Boom, right there, and we tied right back into this consolidation range. You see how these, if I went down to the daily, you'd see there'd be a series of daily candles right in this area right here. Price came right back down and retested those areas, and I think we have a pretty major area of support right here because you can see the reaction off of that level and the rejection. So what I want to see, again, further continuation up on Euro USD. So as long as US dollar is going down, we should be bullish on Euro USD. And right now, out of the gate, I'm looking at these two highs right over here as our first target for the month. If we get above that and we get some real bullish activity, we can go up to 113.40, but we'll cross that bridge sort of down the road. That's still now about 200 pips away, so we definitely got a little bit of time. Now I'm going to go back down to a daily. and just talk about this here for a second. So we can see here, we had price in December. December was actually a pretty decent month. I didn't do a lot of trading personally. I had lots of stuff on the go on my end of things, but I did take a few trades, and a couple of them in Euro USD. We had just sort of a nice trending run right here. Ultimately, I was looking for them to run above these highs here, and we got that sort of middle of December. And then after about the, what was the date? I think after about the 15th or 16th of December, I switched off the charts, and I basically spent the time with my family. I didn't do much at all, so I really wasn't watching this big swing up into here either. But we can obviously put a level in the chart there. And let me get rid of these day dividers so you can see a little bit better. So we have a new high, or sorry, an old high up here at 112.50, we'll call it. Nice even numbers, they work a lot better, because everybody's trading platform is different, of course. And that's one thing I wanted to mention to you guys. Again, if you are new to my YouTube channel and you're just checking out some of these reviews for the first time, it's always a very good practice to ensure that you have multiple data feeds from different brokers, okay? This is a demo account, so this is just the name of this guy here is Vantage FX. I do some stuff with them, a lot of demo accounts and things like that, and they have a great, reliable data feed. I've been using them for years. I have nothing but good things to say about them. If you want the link for that, let me know. Just send me a note or an email or a direct message or something. And I can certainly give you all the details for these guys if you want to look at that. But these guys are great. But every now and then, you get hiccups in the data feed. So what you always want to do is you want to double check and verify the data that you're getting is correct. And so what you want to do is you want to go in, and this is just bar chart. You guys can use whatever else. I have a couple of different platforms that I use. I'm not going to recommend any other ones, but you guys can go out and find your own brokers. But just find a broker with a reliable feed and have 1, 2, or even 3 of them just to verify that the data that you're getting is correct. Because a big thing in trading, if you didn't already know, is that a lot of times price, if it gaps in price will return back down to those areas. And so with that, you've got to really know, am I looking at, a reliable gap? Like, this area in here, was this a gap? Did this actually happen, or is this just a break in my broker's feed for whatever reason that didn't replicate through? So let's verify that. That date was on the what is that, the 2019 March 14th to March 15th. We have that big gap in there. So let's just go back to the charts and let's see if we actually have something like that in there. This is the cash price, this is the futures contract for the US dollar, March 2020 contract. It gets a little bit spotty when you go all the way back into March, so I'll zip over to the cash price, and you can see in here, let's get a 1 year. Uh-oh, sorry guys, no data to display. Let me just do a refresh on this. 1 second. Sorry, technical difficulties. I thought I already had this on the year chart already set up. There we go. Okay, what date did I say? March the 14th, 13th, 14th. Yeah. No, that's not right. I'm sorry. Give me 1 second, guys. Technical difficulties. This does happen when you do these recordings sometimes. March 14th to the 15th. 2019, March 14th to the 15th. See right in there? So do you see that, guys? And that's exactly what I'm talking about. We do have a little bit of a gap right here, but that second gap down in here doesn't exist. So that could be an interruption in my data feed. So I brought this up just to show you, without getting into too much technical, information about that on this. So try to keep it very, very simple. Get a different broker, get a couple of them, verify your data. Before you start jumping into trades, make sure what you get. And you don't have to go in and worry about the 15-minute charts and everything like that. I'm talking about the dailies, because the daily charts are really what you're going to get all your big moves off of. So, do all these gaps exist? Did price, take out the high here, or did it fall short? What did price do? Verify it in a couple feeds. That's all I'm going to say about that. Okay? Okay. Euro USD, apologize for that brief interruption. So we took out the highs here, again came up, failed to get above that high here, and we had a nice deep retracement. This was a beautiful retracement, and this was that retracement off of the weekly chart back into this consolidation level right in here. You see how price dipped right back in here, and this is a real area of confluence right in here. You can see how much time price is spent in here. We ran higher and came right back into that range again. Now what I'm expecting is this range in here to offer support and to this be the low. It may not be. So what I'm gonna just let you know, guys, if price comes down, and this is very similar to my analysis on what I was talking about, I mainly said you know, this pivot right here on the US dollar, I didn't want to see them go above. I'm going to be a little bit more stringent on the Euro USD. I'm going to say I don't want price to go anywhere below 110.90. If we stay above 110.90, we could, you know, on some of this news, you know, non-farm, everything else next week, we could, this week, we could just do a real quick shot down, rebalance one more time, running this low. So I'm not going to say this is definitely going to be the low, but I like how they shot down and rejected. We could come down one more time. It does happen sometimes. And that's why I'm not really going to be taking a lot of weight into this week because of the non-farm numbers coming out on Friday. But this is my line in the sand for Euro USD, 110.90. As long as we don't get below there, then I think we're going to remain bullish, and we're probably going to see higher prices. And that happens, and I think we're probably going to end up seeing price eventually, and that's why I have it up here, run for these highs up here. We have a lot of levels up in here that I'm very interested in. 113.40 being one of them, as mentioned before, and this one right here at 112.85. I like that as well too. So possible setup going into the next couple of weeks. Euro USD, it's pretty slow to move. It's not like it's going to get up there tomorrow, so don't worry, folks. We've got lots of time to look at this, but that's, I think, where we're going to eventually be headed. Okay, pound dollar. Now, the pound has a lot of news happening around that as well too, with the Brexit vote, a lot of parliamentary votes and decisions coming out of the UK. A parliament there, so you're going to want to have, and I'm not going to get into it today, I'll let you do that. I do a lot of economic data research, studying news and everything else. I would highly recommend you guys, if you are interested in trading Forex and really want to get to know it, I would highly recommend you start poring over all of that news as well and keeping yourself abreast, because there's a lot of stuff going on. Now, one of them being this run here. I was looking for this all through November into December as price was just chopping sideways in here. I've been calling these highs up in here. I wanted to see them taken, and boom, we got that right here on this run mid-December. We actually got it, early December. It was, I think, the first week, yeah, but the first week of December there, the 6th, 7th, 8th, right in there, we blew out those highs right there, and then basically once we hit this high here, I stopped looking at the the pound dollar, and we actually got one more blistering rip higher, running out this old major high here from March 1st of 2019, and you can see here that was the high of 2019. That was the old high of 2019. Smashed that level, so great to see. Like to see that movement. And then we had price come all the way back down, rebalance again. It went deep into this consolidation level here, and then rejected very strongly again. And so far we've had a failure swing. I'm going to remove this. We've had a failure swing here. So this typically is fairly bearish. And we've had a nice 2-day retracement back down. Now, what I think we're going to see, I think long-term we're probably going to remain bullish on pound dollar, okay? That's my overall outlook. I think there's lots of levels up into here that we could be reaching for, one of them being this 136.50 level up into here. I'll talk about that at another time, but I don't want to see them come all the way underneath this level in here. So I've got this level marked out here, but and I will drag it out, but I really don't want to see them come down really under this swing low. I'm hoping that this is going to be the low, and that low came in on right before Christmas, December 24th. They were slamming that market down. And then they spent the next week between Christmas and New Year's running back up just to give back. So what I think we're probably going to see is prices are going to come back down and rebalance off the 130.30 level, or slightly higher, maybe 130. My apologies, guys. I can't read, obviously. What I meant to say was 1 1.300 level. I believe we're probably going to see price come back down into here and just sort of retrace back a little bit deeper. Certainly doesn't have to. This could certainly be the low, but again, with all the NFP and all the news later this week, I think we're probably going to see price erode a little bit. But what I ultimately believe is going to happen, if we do come back down and retest these areas in here, I think we're going to see a nice explosive move to the upside from there. And again, we can start targeting some of these other levels that we have up here, okay? But for now, like I say, this one here is, look where we're at, and this is the big thing. Look where this is at, and how much time price spent in this level, between this red line and this red line. Look how much time price spent all the way back in here, and then it was crouching just below that level and then sprang up into it here and then came right back in, and now we're back up and now we're back down. So there's a very good chance and a very good possibility that we could just see a series of highs and lows in a tight consolidation area for the next little while before the price decides to eventually break out. And I believe when it does break out, if this happens, this is a big if, I don't know, we could just shoot right through it, but I believe we're going to break out to the upside. Okay, so that's ultimately the pound dollar. But again, please keep in mind with all the Brexit, do some research, do some homework, do your own due diligence on it, and have a read into what's going on in there, because there could be some crazy moves happening, and this is one of them. Obviously, if you have been living under a rock and haven't been ever trading the pound dollar, this was that whole Brexit vote when the nation came together and voted on what to do with to stay or to leave the Eurozone, and that was that result of that vote. And now they've essentially been trading sideways ever since. So just be careful with that one. Okay, moving on. Euro GBP. I'm going to try to run through these last few here to wrap this video up, because it's getting a little bit long, and I apologize for that. Normally, guys, again, if you are familiar with my weekly reviews, I try to keep them to that 15-20 minute max, because everyone's got stuff to do. So just a real quick, brief review. Boom, boom, boom. You're out. You're hitting the week running, and away we go. This one's obviously going to be a little bit longer. Apologize, because it's the first one of the year, and there's a lot to talk about. So, okay, Euro GBP. We had obviously these lows in here. I was calling these since basically early in after this run up into here, and we started descending. I was calling these lows getting taken out, and every single one of them, every single target to the downside in Euro GBP got hit last year. So you're welcome. And to be honest with you, I did not see them getting all the way down below these lows here. This was a surprise to me. So we can check that off, but as you can see, I've had it marked on the chart, so that's checked off. What I was only looking for was these lows here, and I'll just go down to a daily so you can see those a little bit better. Right in here is where I was looking. So as price was consolidating in here all through October, November, I said my ultimate goal is right down here, and we got that. That swung down late November, early December, and checked that box off. And I stopped watching after that, and then they ended up running them one more time lower mid-December, and I wasn't watching this pair mid-December at all, and we got that nice big price spike down. And again, same thing with pound dollar. That was that big price spike right up in here. Okay. So we don't need these anymore. We can just get rid of those quick. So that's where that price spike came from. Euro GBP seeing the exact result, and now we're right back in this consolidation range. So ultimately, we're going to go back out to the weekly. Major area in here, and this is why I'm a little bit hesitant on the pound dollar as well to offer something. But if we do see this, let's say this was the low, okay? And they ran that and rejected quite aggressively. So if we don't come back down to re-challenge these, we could see a much higher move in Euro GBP. And again, really, all we are is, if you look, like, we're just in a big, long, drawn-out consolidation range. And you look, I mean, look what I'm talking about here. Look at this big range in here. This is consolidation. Yes, we had a nice big move down here, but guys, this is consolidation. And all they've been doing is running the highs, and then, running the lows, and then running the highs. Running the highs, running the lows. So what happens, and how do you trade a consolidation? When it runs the lows, you buy, and you target up here. When it runs the highs, you sell, and you target down here. That's looking like all we're doing here in Euro GBP so far. So I'll just just be careful with that, with trading some of these pairs. But again, if Euro GBP is bullish and we're going up, that is going to give underlying strength to Euro USD, which is why I'm looking at higher prices in Euro USD. Okay, in a nutshell. We're going to revisit this one a little bit later on. I want to get that price develop in Euro GBP a little bit, because there are some levels right down here, cough, cough, wink, nudge. There's some very, very thinly traded price action in here that I think they may want to trade back down to. And again, what you want to do, go back. Does this really exist? Does this look the same on all different broker platforms? I'll let you do your own homework on that and figure that out. But if this isn't the low, and they're going to come back down for another run, that's a pretty easy target on the downside, guys. Okay? So we'll hold this one. We'll put a pin in this one for now. Moving on, US CAD absolutely smoked all the lows for 2019, and they did that at the very end of the year. Those cheeky buggers. You look at that. Look at the trading. Look at this consolidated trading all through the year. We had basically, and US CAD, if you followed me for any length of time, you'll know that I've kind of went cold on US CAD for a while. And what I mean by go cold is really didn't offer a lot of commentary on it, because it's just chopping sideways. There's nothing to talk about, with the odd 1 or 2, 3 days where you get a quick run lower, or one day here and one day here. Really not much to talk about US CAD. They broke through all those lows, which is huge. So what's going to happen, basically, this is obviously tied very heavily to the US dollar and to the price of crude oil. Okay, so US dollar goes down. If crude oil goes up, US CAD goes down. Okay, it gives a lot of strength to the Canadian dollar. So if you look at the Canadian dollar's futures chart, you will see Canadian futures price is going up. So that means it's going to weigh heavy on US CAD. If you want some more information on that, message me on Twitter at F45 Trading, because I'd love to know if you guys want some more information on how some of the symmetries between some of these cross pairs work in the currency baskets. I'd love to do a free video for you. If you want to see that, just shoot me a quick tweet, and I will I'll do a couple of short 5-10 minute videos on explainers on exactly how what to look for and how to do that. So just some new ideas I'm trying to do for 2020. But US CAD, we took out some major areas under here. I'm going to hold off on US CAD until we see a little bit of retracement, which I believe we're going to get. Again, US CAD has some major economic news later this week. Surprise, surprise. I think what we're going to do is come back and swing right back up into here and smash back either into these lows, this low, or even maybe all the way back up into here. I don't think it's going to get all the way back up into there, but we're certainly going to be watching for that. But you can see here, like we've just been making lower highs, mid high, lower high, lower high, lower highs, and ever since. So very bearish, but very ugly to trade, especially if you get trapped in months that are just straight sideways like this. US CAD hasn't been an awesome pair to trade. Definitely a couple decent trades here and there throughout the year, but nothing to write home about, which is why I don't usually talk about it. But major area just run on US CAD, so love to see that. Looking for a rebounce a little bit higher, and then ultimately I think there's a lot of targets below that I think this US CAD is going to ultimately be stretching for. So I will put a pin in this one, so to speak, again, and we'll come back to US CAD as it develops a little bit further. I want to see what happens the first couple of weeks of January here. US yen, I mentioned that I wanted to just kind of briefly discuss this because this is another pair very similar to the US CAD, where really the whole year 2019 was just really choppy, really sideways price action, nothing too exciting. So we've got some major equal highs up here. Right there, I want you guys to focus on. We could see, and they just swept all these lows right here, which is very interesting. So I want to see if yen shoots back up into here. Again, US dollar goes down, it's going to weigh heavy on this pair. But that being said, US dollar's been dropping for a long time, right? We've been dropping since November, whereas US yen has still been staying in this consolidation, and it's just been the past 2 weeks that it's dropped. So could be, very, very difficult. It's not correlated to the U.S. dollar, which is why I haven't been trading U.S. yen. Same thing. But I just wanted to point this out here. We did sweep these lows here. So now the million-dollar question is, do we just shoot right back up, try to shoot for these highs here, or do we continue to fall over? Really, if price wants to break through this level in here, then we can target lower lows. But until I see something here, and if we get back above this area in here, then I'm thinking we can target this consolidation level and possibly the stop runs above it before it starts to roll over, if it does at all. Okay. Finally, last currency pair, and I'm not going to talk about gold today. I'm going to save that for another one because this is getting a little bit long. Australian dollar, been absolutely beautiful to trade all through November and into December. Absolutely lovely pair to trade. You don't get massive range days, like an average daily range on Australian dollar is, 50, 60 pips. So just a nice steady Eddie pair to trade, nice sort of easy setups, and it's a good little money maker in your demo account, of course. To trade. It's just very, very easy to trade. And you can see clear uptrend. We have a nice lower low. We have a nice low here and a higher low, higher low, higher low, and all the way up. And I honestly believe when we had price create a high in here, which basically just rebalanced off of the lows of this consolidation level in here. And we had a nice 2-day deep retrace to another level of major consolidation and support right in here. You can see that. I'm anticipating higher prices on Australian dollar as well too. One of my targets for this month for sure, the next couple of weeks, is going to be the 70-80 level. But again, I want to see how it shapes up a little bit. We could come a little bit deeper. This level right down here kind of has my eye at 68.90. I'll just bring that up just a wee bit in here. That's kind of got my eye as well too. Whether it gets down there or not, I don't know. I hope this blue line acts as support and we'll see price run higher. But just keep that in mind. I am looking for higher bullish prices. I really like Australian dollar and I really like Euro USD. So I'm going to talk a lot more about that with my members and give them some in-depth detailed setups. If you guys want to take advantage of that, obviously make sure you're subscribed to my YouTube channel by clicking the logo down here, but also check me out at f45trading.com as well too, and you can jump into our members stuff and chat rooms and signals and live reviews as it happens and setups and the whole bit. So if you're not new, then you know all about that. If you are new, please go ahead and check that out. So okay, that's Australian dollar, and like I said, I'm just kind of whipping through the last little bit here because it's getting a little bit long. Want to just briefly talk about oil, because there is some major stuff going on here. Obviously, we all know the U.S. just attacked, just blew one of Iran's general off the face of the earth, and so that didn't make Iran very happy. And they did it in Iraq, and so you get Iran, Iraq, Saudi Arabia, and all of those Middle Eastern countries in there that are the major suppliers of crude oil, and all of a sudden you start a little mini, destabilizing the area, and all of a sudden it puts pressure onto crude oil. Some of the regular, retail buyers of crude oil don't know if their shipments are going to be affected, if the supply is going to get dwindled down, what's going to happen. So it starts to drive price up, and you can see here, little by little, they've been doing exactly that. They've been driving the price up here, and you can see that's a weekly chart. Look at the big surge on oil last week with that strike that was on Thursday. That was right there, and you can see they're not stopping. They're continued. Look at the open. That's why I like to wait for market open to do these reviews for Sunday, because you can see what happens. And look at the big gap up on crude oil, 60-cent gap up. So very nice to see on crude oil. As long as that tension continues over there in the Middle East, this is going to continue. Trade war or not with China, and again, that's all coming to fruition as well. I'll talk more about that later on down the road as that develops and how important that is. But keep your eye on crude oil market, because I believe, and I had a prediction last year that we were going to start seeing $70 oil in the very near future, and I think that's where we're heading. I honestly believe that we can put our targets and our sights up here for the next little while on crude oil. At least, as things are still destabilizing over there, we can at least do that. Now, the one thing that didn't happen, which I'm going to bite my tongue a little bit here, it could still happen, And I made me mad it didn't happen, but it didn't. And I was really I was really hoping we would have saw price do the opposite and sweep down under here. It was all just setting up this area here, and I want to keep your eye on it, because I think this is just going to be an area to watch for down the road. One day, it may not happen now for a year, I don't know. But as they keep pushing this up, it's going to less and less likely to happen. But I think prices could dip below 50 with crude oil. I'm going to keep it on there and keep harping on it. But long story short, nice bullish activity on crude oil. You can see here, clear uptrend. And I think it's going to continue, and I think we can start targeting the 66.50 level here from this old high back in April of 2019. Now keep in mind as well too, what does the first quarter do, seasonally speaking, with crude oil? Bullish, very, very bullish. Look at the first 3 months, January, February, March. What did crude oil do? Straight up off of the lows from December. What did crude oil do? What's crude oil looking like they're doing now? Going straight up, and we could keep going up for the next 3 months as well. So again, folks, seasonality is very, very important to the price of commodities, futures, currencies, and everything else in between. So just keep an eye on that, okay? So that's all I'm going to talk about crude oil. My members will get a much more in-depth analysis on this one here this week, because I think there's going to be lots of opportunities out there. But again, that being said, please take it easy the next couple of weeks. We're just starting the year off. There's lots of time, so don't don't shoot off all your powder, so to speak, right out of the gate. Save some for the rest of the year. Okay. Thanks for watching. I apologize for the length of this one. I apologize for all the noise in the background with my family running around everywhere. But sometimes these reviews, it can't be helped. So anyway, thank you very much for watching. And for all our members, we'll catch up to you in the chat room tomorrow. And for everybody else, please click subscribe to my YouTube channel, because I've been doing a lot more free content this year, and I want to make sure you keep up to date with that one. Thanks for watching, guys. Talk to you on the next one.